Hey everyone, welcome to your Algo Lab. In today's session, we'll give you a quick recap of the most anticipated earnings releases. We'll also take a closer look at individual companies and their peers within the same sector. Without further ado, let's dive in. 3M is a diversified industrial company known for its wide range of products, including adhesives, safety equipment, healthcare supplies, and consumer goods. M&M stock has faced challenges in recent years due to legal liabilities, supply chain disruptions, and slower growth in some sectors. In Q3 2024, 3M reported earnings per share of $1.98, surpassing the consensus estimate of $1.90. The company's improved 2024 outlook reflects the benefits of prior management's restructuring efforts as the new leadership team embarks on a longer-term transformation. This includes portfolio streamlining, reallocating R&D spending for new product development, and upgrading operations to improve the cost structure. Key drivers of the better-than-expected Q3 EPS were the restructuring plan and a favorable tax rate. Organic sales grew 1%, led by a 2% increase in the transportation and electronics segment, which saw double-digit growth in China, largely due to electronics demand. Consumer segment weakness eased slightly, down 0.7% organically, with 4Q performance likely dependent on holiday spending. While all segment margins contracted in Q3, overall company margin improvement was supported by corporate productivity gains. Next, let's assess how 3M has performed compared to its peers in the industrial conglomerate sector. This sector tends to have a below-average beta to the market, making it less volatile during both upswings and downturns. We have also compiled key financial metrics for 3M and its peers. The analysis includes two sections, quality and valuation. In the quality section, we consider metrics such as revenue growth, net profit margin, free cash flow margin, debt-to-equity ratio, and current ratio, with higher composite quality scores being preferable. In the valuation section, lower values indicate a more attractive valuation. General Motors is a leading American automaker known for brands like Chevrolet, GMC, and Cadillac. The company is investing heavily in electric vehicles, aiming to compete with leaders like Tesla. GM's stock performance is influenced by vehicle sales, global supply chain factors, and the growing demand for EVs. In Q3 2024, General Motors reported earnings per share of $2.96, surpassing the consensus estimate of $2.40. The company may be able to maintain similar margins and automotive free cash flow next year, thanks to its ability to keep discounts below industry levels through product refreshes, even amid softening demand. Higher margin, revamped internal combustion engine models should help offset warranty expenses driven by inflationary pressures. Losses from electric vehicles are expected to narrow in 2025 as the company benefits from scaling production of more affordable models like the Equinox and Blazer. Additionally, with improved liquidity and continued strong cash generation in 2025, there is potential for further share buybacks as management looks to boost the company's low valuation. Next, let's assess how General Motors has performed compared to its peers in the automobile manufacturers sector. This sector tends to be cyclical, moving in tandem with the broader market during both rises and declines. We have also compiled key financial metrics for General Motors and its peers. The analysis includes two sections, quality and valuation. In the quality section, we consider metrics such as revenue growth, net profit margin, free cash flow margin, debt-to-equity ratio, and current ratio, with higher composite quality scores being preferable. In the valuation section, lower values indicate a more attractive valuation. Philip Morris International is a global tobacco company known for brands like Marlboro. The company has been shifting its focus towards smoke-free products like IQOS as part of its long-term strategy to reduce traditional cigarette sales. PM's stock's performance is influenced by global tobacco demand, regulatory policies, and the success of its smoke-free product transition. Philip Morris International's stronger-than-expected cigarette and heated tobacco shipments, 2.6% growth versus 0.3% estimate, along with better-than-projected oral smoke-free product shipments, 25% gain versus 18%, were key drivers of the 5% adjusted EPS beat. The rapid sales growth of its Zyn oral nicotine pouch business, up 44% in Q3 volume, also encouraged management to raise its adjusted EPS growth forecast for 2024, excluding currency effects, to 14 to 15%, up from the previous 11 to 13% projection. The EPS guidance assumes about a 13% increase in sales volume for heated tobacco units, HTUs, and no earnings impact from a potential impairment of its Canadian affiliate, Rothmans, Benson and Hedges Inc. Next, let's evaluate how Philip Morris has performed relative to its peers in the tobacco sector. This sector tends to be less correlated with the general market, as its increases and decreases do not typically move in sync with broader market trends. We have also compiled key financial metrics for Philip Morris and its peers. The analysis includes two sections, quality and valuation. In the quality section, we consider metrics such as revenue growth, net profit margin, free cash flow margin, debt to equity ratio, and current ratio, with higher composite quality scores being preferable. In the valuation section, lower values indicate a more attractive valuation. On this channel, we share tested strategies for investing and trading, covering everything from technical analysis and fundamentals to economic trends and sentiment-based algorithms. If you don't want to miss out on any of our content, be sure to like, subscribe, and hit the bell icon to stay in the loop. Thanks for watching, and I'll see you in the next video.